Hello and welcome to NDTV Profit. You are watching the Mutual Fund Show. I am your host Muralidhar Swaminathan. It's the season of business cycle funds. Two new funds have been launched, one from Bank of India Mutual Fund and another from Motilal Oswal. There are 5 such funds. To understand more about this category of funds, let's go across to our guests. We'll soon be joined by Bank of India Mutual Funds, Alok Singh and Pankaj Mathpal. I think we have both gentlemen. Welcome to the show.
Thank you very much.
Okay, I'll first go to Mr. Alok Singh. He is the CIO at Bank of India Mutual Fund. And the first question, Mr. Alok Singh, is what is this? This seems to be a season for business cycle funds. Tell our viewers what business cycle funds are. Why should an investor invest in business cycle fund?
If you look at, as the name suggests, the business cycle. So if you look at in economy itself goes through the cycle, and because of the economic cycle, everything which is part of the economy goes through the cycle. So whether it is sector or any other macro factors, they go in a cycle. So this fund basically, or this way of investing, allows you to align with that cycle. So when the cycles are bad, you will reduce exposures over there, and when they are good, you will increase exposure, and you try to create alpha over the market with aligning yourself with such things. So it becomes an interesting way of enhancing your alpha generation capabilities. And that's how it differentiates with the other any diversified fund or a sectoral fund. Basically the way it tries to capture the market or the economic uptrend. Also able to navigate, because if you are looking at in a sectoral fund, you get stuck in a particular sector, or if you are looking at a diversified, then diversified has many things which lead to a normalization of returns, which could be called balances, and so this becomes more focused towards what's happening and what's relevant in the economy and resulting into the businesses, and that's how I think this becomes a superior investment strategy.
Okay, so now there are 4 or 5 business cycle funds, and you are launching one. Motilal is also launching one. Now, in your case, how will this be different from the other funds? It must be the same basket, is it?
Yeah, no. So obviously the name is same, but the investment style are different. There are 3-4 ways where the people look at. One is a very macro way. So when the economy is doing good, you increase the beta of your portfolio, and when it is not, you reduce the beta. That is one style. Other is a sectoral style where you go, specifically for a sectoral call, and you increase the sector weight and things like that. The third one is more like a thematic. What we are doing to do? We are looking at mega themes or mega trends which are emerging in the economy, and try to build portfolios around that. Mainly because the time when the economy is doing good and the themes are building well, those themes lead to either newer pool of profits, or they generate or they augment the existing pool of profits. So basically that resulted in higher earnings growth for the portfolio, and that's how we are looking at in this fund.
Right. So in the current scenario, we are the fastest growing economy. The growth is going to be pretty strong. We are on a very stable chart as far as GDP growth is concerned, and businesses are also growing. But most of this is priced in most of the sectors in the market. Therefore, if you are going to look at a mega theme, let's say from the next 5 years point of view, what would be that mega theme? What are the sectors or sub-sectors or specific industries that you will look at?
Okay, interesting. Obviously, as we are moving, so markets are doing their job, and they're trying to discount many things which are there in the table. Right. So like if I look at India as a country today, We are fifth largest economy with the, say, roughly $4 trillion of economy. And we are expected to become third largest and probably reach 7, 8, $10 trillion in times to come. Then if I look at my size of the banks, none of our bank feature in the top list today. But when I'm third largest and at 7, $8 trillion, will not my bank still feature there? I think they will. And they will be by virtue of the size, right? Maybe the margins may be lower, margins may come down, but the absolute pool of profit will be much, much higher, maybe 4, 5x than what it is today. And that will get reflected in the price. So, when we look at discounting the market is only looking at maybe few quarters or few years. But if you are looking at, this way that, I'm just giving one example, then in that case, then the runway for growth for even the well discounted bank today could be much higher. So I think when you look at theme-based investing, you look beyond near term, and that's where it generate higher profits if you are able to your hypothesis holds good. So I think we are not that worried, and this debate will always be there. Near term volatility because of it being discounted, it will always be there. But if you look at if we are talking of it discounted because we are looking at $4 trillion economy. If we talk from the $8 trillion economy point of view, obviously the addressable market, the pool of profits and everything changes, and probably some of that may not be discounted today.
Right. So before I go to Pankaj, one focused question, Alok, is what would be the 2 or 3 mega themes that you are looking at? Is it going to be in materials? Is it going to be in manufacturing? Or is it going to be simply in renewable energy? Because these are obvious themes that are there in front of us. But as a fund manager, as CIO of this mutual fund, you would have identified some mega themes. What are they?
See, one very prominent themes and where the valuations also are quite reasonable is the financial well-being, right? When I'm talking of financial well-being as an economy. So in that, if I look at them, there are 3 mega things in the financial well-being. One is the size itself, and this is what I gave you an example of. Then the second is the accumulated wealth and the people who are managing or getting influenced by wealth. And the third of that financial well-being is also the discretionary spend, the entire consumption. So if you look at this is all part of the mega theme, which is the financial well-being, which is linked to a size of the economy, our per capita GDP income and things like that. So that is one thing. The other is, I think, the entire manufacturing theme, which includes some amount of what is already factored in by the market in some of the places may be already expensive. And when you talk about manufacturing, it has to be driven by power, because today for everything, right from the plain vanilla manufacturing to a high-end AI or something like that, which we are talking of, the power demand is going to be much higher. So, while we may say renewal has already done well, but if you look at the kind of power we may need, so I think it will be mix of a few themes, which could be, I think the broader themes which we are looking at today is the financial well-being, which includes the not only the financial companies, but the discretionary spend. Second is what we are looking at, the entire Make in India theme. Some of it is already run up, some of may evolve, I think, but that's a decadal theme to play. Third, I think we are very keenly looking at power. I think that is something which is without that, and we will not be able to move anywhere away from $4 trillion, which we are today. So I think that's, and lastly, I think we are also very looking at this entire, so to say, the renewal or reusable thing. Unfortunately, there are limitations in terms of limited number of stocks and the size of them to be traded. So I think that's a limited, but I think, yes, we remain interested there.
Yeah. It's now many people keep talking, and I think you have also mentioned in your one of the themes is that demographic trends that are emerging. Now, this is very vast and very wide. Where do you think demographic advantage will help investors make money, and how will you identify them?
So when we talk of, see, demography is a large word. You have to look at in the, you have to break it up, and basically demography has to lead into a behavioral change, right? So we have to look at what is the behavioral change which is happening, right? Like if you look at, if you go 20 years back when the car manufacturers used to sell their car, the lower end of the car used to sell more. And today we see, at least in big cities and metro, the top end of the car is selling more, right? Now, if I give you an example, like base model of a car may be selling for 7 lakh rupees and the top end may be selling for 15 lakh rupees, right? More than double. But you see more of 15 selling. That is basically a demographic change leading to a behavioral change. So, and that is creating a pool of profit, because that 7 to 15 migration means some of the work material used and things like some of them may be not manufactured today in India, like sunroofs and alloy wheels, which have to be manufactured, more sensors and all that. I think that was not there as a part of our economy when the same guy was selling same number of cars 20 years back. So that is what we call as a demographic change leading to a behavioral change, and leading to a discretionary spend increasing. So there are many things which are like, similarly, if you look at the, in terms of air conditioners, we are seeing the increased trend. So I think that is what the demographic change is leading to, some of the pools, generation of some pool of profits, or getting or influencing the existing pool of profits in a significant way. So you have to dissect and come down on the granular level to make to see whether that makes sense. Some of them may make sense, but you may not have things on the listed space. Some of them may make sense, but they have a very little influence on the existing businesses. So I think that work which we have to do as a asset manager, and then look forward what we can execute and what we can be the part of the portfolio.
Right. Let me go to Pankaj now. Pankaj, what are your thoughts on business cycle funds? It's really very interesting space to look at, because we typically look at thematic funds, large cap, small cap, but a business cycle fund, it's of course now catching up. A lot of, I think we have some 4 or 5 funds. What are your thoughts as far as investors are concerned, and how should they invest in business cycle funds?
See, it's a thematic fund, no doubt. But if you see, this fund has flexibility to invest across the sectors and across the market caps. So whether large cap, mid cap, small cap, you can find the it's well diversified fund in these categories. So as Mr. Alok was explaining, see, there are different cycles in the economy. So it may be expansion, recession, peak, slump, and in different business cycles, different sectors perform differently. So if a fund manager take an active call, so it's a kind of flexi cap fund where the sectors are managed actively. So I think that investors in their long-term core portfolio can consider this theme.
So let me go straight to the queries. The query that I am getting is from Puneet. He is 35 years and he wants to create wealth over a period of time for his child's wedding, education and retirement. Now, he is asking us to advise what should be the portfolio, but his current investments are looking very interesting. I will read out the investment. Axis Small Cap, he has put in 10,000 rupees as SIP per month. Quant Small Cap, another 10,000 per month, again SIP. Nippon Small Cap, another 10,000, again SIP. And Parag Parikh's Flexi Cap, 10,000 per month. 3 small cap funds and 1 Flexi Cap. Pankaj, what's your advice before I ask Alok also to weigh in?
See, there are 5 funds. All the funds are good. But the thing is that he has major allocation in small cap. There are 3 schemes in small cap. One is a flexi cap that has major allocation in large cap, and then one is mid cap fund. So though the horizon is 20 years, still my suggestion will be that he should reduce his exposure to small cap fund and increase in large cap at this moment, especially. That is the device. Otherwise, schemes are good.
Okay, schemes are good is what Pankaj is saying. Let me ask Alok for his thoughts. How would you help somebody who's around in the mid 30s wants to build wealth to meet the family's requirements over a period of time, what should be the strategy, Alok?
See, one thing one need to consider that the core allocation, right? When if you have an investable corpus, then there is something which we call the core corpus. So core corpus should be in a more well diversified allocation in terms of any well diversified fund, whether you consider a flexi cap or you consider a multi cap or any other, right? That should be that, and then you need to have some enhancers which could come in terms of whether a small cap fund or something which is a sectoral allocation, that could be more of an answers. But the core allocation should be more stable so that you can hold it for a longer period of time and let it compound with a lesser amount of volatility. I think that is what one should look at, and I think somewhere people should look at long-term averages and not get swayed by last 3-4 years, which we have seen. I think if you look at in that 15-20 years averages and extrapolate, I think that will give a sense that the incremental risk may not be equally rewarded at all point in time.
Absolutely. I think core allocation, as Alok says, is very important because small caps can give you tremendous returns. They can also bring down the returns over a period of 10 years or 15 years. We don't know. But then small caps can help increase your return. I think in Puneet's case, it's very important. Puneet, if you are watching the show, do pay heed to this advice that a core allocation which will give you stability and steady returns over a period of time is critical for your wealth planning strategy. The next question I have is interesting again. This is somebody, Mr. Krishna, who is 24 years old and fantastic. He started his SIP in 3 different mutual funds and plans to do the same for the next 25 years. He is looking at some right direction. His investments are the following: ICICI Prudential Bharat 22 Fund of Funds Direct Fund, roughly 12,000 rupees per month is what he is putting in. Then ICICI Pro Nifty Next 50 Index Direct Fund, again growth 5,000 rupees per month. UTI Nifty 500 Value 50 Index Fund, again this is a growth fund, 5,000 rupees. Interesting mix. I think in this case Krishna is allowing the market to decide and not the fund manager, because most of them are index funds. Pankaj, your thoughts?
Yeah, that's true. See, in the previous question, what we saw that the investor had major allocation in small cap. But in this question, Mr. Krishna has major allocation in large cap. See, he's quite young. His horizon is 25 years. Though at this moment, the valuations of large caps are reasonable compared to mid cap, small cap. But still, I'll suggest that he should have some allocation in mid cap and small cap as well. If not directly small cap funds or mid cap funds, he can invest in flexi cap fund or multi cap funds. So through flexi cap and multi cap fund, he can have some exposure in mid cap and small cap as well.
Right. I think Alok, your answer to the previous question about core fund allocation, what do you think about index funds or ETFs based on let's say any good index? As a strategy, how will that help for somebody who is as young as Krishna?
So if you look at what I see on the screen are very, very generalized indexes, right? So what happens is when you are following a generalized indices, typically when the markets are trending, you see passives, are able to do better because there are no biases which the fund follows. Whereas a fund manager may have biases, and that leads to an outperformance. But when you enter into a volatile phases, that time you will see a active fund typically do better than the index fund. So since this person has started quite early, and I think I should congratulate him for that. I think there should be some active and combination of active and passive, because it is not that always active will do better or it is always the passive will do better. It depends on the phase of the market. And also, the implied volatility and all those kind of a thing. So I think he need to again balance with some amount of active involved in the allocation. I think that's my advice would be.
Okay, very interesting. I'll quickly, I think we have time for one more question. This one is from BS Jagdish. He's 65 years. He wants to know, where should I invest 15 lakhs in a mutual fund scheme and go for systematic withdrawal plan after 1 year. Now, this is a challenge. After 1 year, if he has to withdraw, the time limit is very less for withdrawing, and he is expecting 6% monthly withdrawal. What should be the balance amount after 15 years, and what should be the strategy here? Pankaj?
6% monthly withdrawal means more than 72% in a year. So I don't know any scheme I can recommend which will deliver 6% return every month. But coming to the second part, that SWP, see, because he wants to withdraw money regularly, and for that, hybrid funds can be a better choice. But if you want to redeem, if you want to withdraw just after 1 year, in that case, equity savings funds or conservative hybrid funds, that can be a better choice. And if he can wait for 3 years, 4 years, and then he wants to withdraw, in that case, aggressive hybrid funds or dynamic asset allocation fund will be a better choice. So what he can do, he can divide this in two parts. Some money he can allocate in conservative hybrid funds and equity savings fund. From there, he can start SWP after 1 year, and the major portion of his portfolio can be in dynamic asset allocation fund and aggressive hybrid fund. From there, he can withdraw after 3 years. So that will be an advice, and his expectation should be something like 10% in a year. So every month he can withdraw initially, say 0.5%, 0.6%, not 6% every month.
I think so. This is very interesting because 6% every month means that in a year and a half, the money would have completely been withdrawn. I think, Alok, I'll come to you. I think Jagdish wants to generate cash flows from this for his monthly expenses, which is a typical problem many people would have after retirement. It's very important to maintain cash flows every month. What would be your advice to senior citizens who want to depend on their life savings and generate cash flows every month?
The issue which one faces in such strategies is that if the underlying asset class or the fund has not grown enough in, say, 1 year or 2 years' time, then you start actually eating into your capital. And then, as you said, after 1 year, 2 years, you see that entire capital is gone. Because you were withdrawing in a particular manner. So I think one is that whichever, whether it is a hybrid fund or an equity fund you choose to do SWP, you should allow it to grow for some time. And for that period, ideally you keep some money aside, maybe put it in a liquid fund or something like that, from where you withdraw till maybe 20% you keep aside. I'm just giving you a back of the just as a calculation, you put 20% aside, keep it in a liquid fund or something like that, and you put the balance into some place where it grows, and then after some period you start withdrawing. I think that will be far better strategy than putting it one place and just start withdrawing.
Yeah, very interesting. I think we are running out of time. Let me thank Alok and Pankaj for taking our viewers through all their queries. There will be lots of queries that we are getting. Unfortunately, due to time constraint, we are unable to, but keep sending your queries. We'll try to answer right from your plan when you come out of your college and start investing or building wealth for the family's future, or building wealth and cash flows after retirement. We at NDTV Profit will definitely try and help you answer and build wealth. Thank you so much for watching NDTV.